My dear children, in this fourth module, we are going to study the differences between revaluation account and realization account. Revaluation account is prepared at the time of admission, retirement, and death of the partners. But realization account is prepared only at the time of dissolution of the partnership firm. Revaluation account is related with the revaluation of assets and reassessment of liabilities. But realization account, it is prepared to realize the assets and to pay the liabilities of the partnership firm. The purpose of preparing revaluation account is to record the fluctuating values of assets and liabilities and to calculate the profit or loss on the revaluation. But in the case of realization, the main purpose is to calculate the profit or loss after recording the assets and payment of the liabilities, or after realizing the assets and liabilities of the firm. Then revaluation account is needed at the time of admission, retirement, and death of the partner. But realization account is not needed only when at the time of dissolution of the partnership firm. Then in the case of revaluation account, the profits and losses calculated is distributed among the old partners only. But in the case of realization, the profits and losses calculated is distributed among all the partners in their profit sharing ratio. In realization account, we already enter both the value of the assets and liabilities which is given in the balance sheet and realized value of the assets and liabilities. But in the case of revaluation account, we take only the differences between actual value of assets and liabilities and revalued amount of the assets and liabilities. The difference between these two figures will be taken in the revaluation account. Next, we are going to record the important journal entries at the time of realization of assets and liabilities. In realization account, first we have to record the journal entry for recording the assets of the firm. The entry will be realization account debtor to assets account. The next step is to transfer the liabilities of the firm to realization account. The entry will be concerned liabilities account debtor to realization account, being liabilities transferred to realization account. Third step is to record the realized value of assets in realization account. The entry will be bank account debtor to realization account, being assets realized. Sometimes a partner may take over the any asset. In that case, the entry will be concerned partners capital account debtor to realization account. The next step is to make the payment of liabilities. That is recording the payment of liabilities. The entry will be realization account debtor to cash account. Sometimes a partner may take the responsibility to make the payment of any liability or payment of creditors or payment of bills. In that case, the journal entry will be realization account debtor to partners capital account. The next head is recording the realization expenses. Sometimes the company make the payment of realization expenses. In that time, we have to pass the following journal entry. That is realization account debtor to cash account, being realization expenses met by the company. Sometimes partner may take the initiative to realize the assets and liabilities. Then he make the payment of realization expenses. In that case, the journal entry will be realization account debtor to partner's capital account. Sometimes unrecorded assets may be given in the problem. In that case, we have to pass the journal entry, that is cash account debtor to realization account, being unrecorded assets entered in the realization account. Sometimes there may be unrecorded liabilities may be given in the problem. In that case, we have to pass the journal entry, that is realization account debtor to cash account. After entering all these transactions, next step is to find out the closing balance of realization account. The closing balance of the realization account may be profit or loss. If it is profit or loss, that amount should be distributed or shared among the partners, including all partners. It should be distributed or shared among all the partners in their profit sharing ratio. If it is profit, the entry will be realization account debtor to partner's capital account. If it is loss, the entry will be partner's capital account debtor to realization account, being loss transferred to loss on realization transferred to partner's capital account. These are the important journal entries to be passed in the book of partnership firm at the time of dissolution. Thank you.